Hey everyone. So are you ready for a wild ride? Because next week is going to be huge GE for IPOs.
Oh, yeah. It's going to be a busy one.
11 companies are stepping onto the public stage, with 5 hitting the main board and 6 venturing into the SME arena.
That's a real mix.
That's right. And to make sure we don't miss a beat, we've got some insights from Live Mint and the Economic Times. We're diving deep, folks, to figure out which of these IPOs might just be worth your hard-earned cash.
So much to unpack. It's a good time to be an investor, though. This rush of IPOs kind of shows how energetic and optimistic the Indian economy is right now.
Yeah, exactly. Diverse sectors, each with their own unique story. But let's be real, there are 2 names creating a serious buzz, Vishal Mega Mart and MobiKwik. What's got everyone so hyped about these 2?
Well, they're both kind of tapping into some major trends. Take Vishal Mega Mart, for instance. Their IPO opens December 11th to the 13th, and they're all about that value retail game.
Value retail, okay.
Yeah, a massive network of hypermarkets strategically placed in those Tier 2 and Tier 3 cities, catering to that rising middle class looking for affordability.
So they're not just riding the general retail wave, they found a specific niche within it.
Spot on. And that focused approach is turning heads. They're aiming to raise a hefty euro 8,000 crore through an offer for sale, with a price band of 74 to 78 per share.
Okay, that's a big chunk of change.
Oh, and there's more. Their gray market premium, which basically means what investors are willing to pay above the IPO price, it's already at 24, hints at a possible 31% listing premium.
Wow. Investors are really feeling the Vishal Mega Mart vibe. Now, MobiKwik also going public between the 11th and 13th, but their game is totally different, right? Fintech, what's the deal there?
Digital payments and financial services, that's their bread and butter. They've really carved out their spot in this booming market. They're planning on raising 572 crore through a fresh issue of shares.
Fresh issue, so that means...
New shares, yeah. They're raising capital for the company itself. Price bands set at 265 to 279 per share. And get this, their gray market premium is even higher than Vishal Mega Mart's, a whopping 120. A potential 43% premium when it lists. The fintech craze is alive and kicking.
That's insane. So you mentioned Vishal Mega Mart is doing an offer for sale, while MobiKwik is going for a fresh issue. Could you break that down for us? What's the difference and why should investors care?
Sure thing. With an offer for sale, existing shareholders, think early investors or even the company founders, are basically selling some of their holdings.
Cashing out a bit.
Exactly. The company itself doesn't directly see those funds, but with a fresh issue, the company issues brand new shares to raise capital. That money goes towards things like expansion, paying off debts, maybe even starting new projects.
So Vishal Mega Mart, existing shareholders taking some profits, while MobiKwik is using this IPO to fuel future growth. Got it. But wait, there's more. We've got 3 other companies joining the main board party next week. It's like an IPO extravaganza. What should we know about them?
Okay, let's start with Psy Life Sciences. Pharmaceuticals and biotechnology, that's their playground. Their IPO also kicks off on the 11th, runs through the 13th.
Another one for that week.
Right. Aiming to raise a cool euro 3,042.62 crore. It's a combo deal, actually. A fresh issue of shares worth 950 crore and an offer for sale worth 2,092.62 crore.
Mixing it up a bit.
They are. Price bands sitting between 522 to 549 per share, and their gray market premiums already at 21. Investors are definitely intrigued. Then we've got Inventress Knowledge Solutions, an IT services and consulting firm. They open their IPO on December 12th, closing on the 16th.
A slightly longer window.
Yeah, it's entirely an offer for sale of 1.88 crore equity shares. They haven't spilled the beans on their price band just yet, though.
So a little more suspense with that one. And the third company?
The International Gemological Institute. Education and certification in the gem and jewelry world. They're going big, aiming for 4,225 crore. That's a mix of a fresh issue, 1,475 crore, and an offer for sale, 2,750 crore. Opens on the 13th, closes on the 17th. Price band, still a secret.
Wow, some serious numbers there. It's amazing to see companies from such different sectors all trying to catch the eye of investors. Shows just how wide open the opportunity is in the Indian market. But hold on, we're not done yet. Remember those 6 SME IPOs?
Oh yeah, this IPO went is jam-packed. And don't underestimate the SME space.
Right, it's a whole other ballgame.
It is. It's a chance to invest in companies at an earlier stage in their journey. Could be big potential there.
Higher risk, higher reward, right?
Sometimes, yeah.
No.
But before we jump into those, let's clear up the difference between a main board and an SME IPO. For someone who might be new to this, what's the key distinction? It all comes down to where the companies are listed. Main board IPOs, they're on the big leagues, the major stock exchanges like the BSE and NSE, larger, more established companies usually.
The big players.
Exactly. SME IPOs, on the other hand, they happen on platforms specifically for small and medium enterprises. Think BSE, SME, or NSSME.
Okay, so a different stage for different kinds of company.
Makes sense, right?
It does. So if I'm looking for high growth potential, should I be checking out these SME IPOs?
Well, think of it like venture capital. You're betting on a company's potential early on. Could lead to some serious returns if they hit it big, but, and there's always a but.
Higher risk comes along for the ride.
Absolutely. These companies might not have a long track record, so doing your homework, your due diligence, that's even more critical.
Definitely something to keep in mind.
For sure.
It's amazing how this whole IPO wave, main board and SME, really shows how dynamic the Indian economy is. Makes you wonder, what else does all this activity tell us about the overall health of the economy?
It's true. A surge in IPOs usually points to some positive vibes. Companies feel confident about their growth. Investors are eager to jump in. Generally good signs, but, and there's always a but, it's just one piece of the puzzle, you know?
Right, there's always more to the story. So what other indicators should we be watching? What else helps paint the picture?
Well, GDP growth, for one. It's the bread and butter, kind of the basic measure of economic activity. Consistent, sustainable growth over time, that's what you want to see.
Steady and strong. Makes sense.
Then there's inflation, always a big one, directly impacts what people can buy and how much things cost for businesses.
So ideally, we're aiming for good GDP growth and keeping that inflation in check.
Exactly. Finding that balance is the sweet spot for a thriving economy. And unemployment rates are important too. Tell you about the health of the job market. Lower unemployment usually means a stronger economy.
Yeah, more people working, more economic activity. Are there any other indicators that you find particularly interesting, ones that give you a good feel for things?
You know, consumer sentiment can be really telling how people feel about the economy, their own finances, that kind of thing. When consumers are feeling good about the future, they tend to spend more, which helps boost economic growth.
So it's not just hard numbers, it's also about how people are feeling.
Exactly. It all plays a role. And when you look at all these indicators together, they give you a broader context for these IPOs. Now, going back to those two attention grabbers, Vishal Mega Mart and MobiKwik, what do you think about their risks and opportunities?
Well, Vishal Mega Mart seems pretty savvy, targeting that value retail segment in those Tier 2 and Tier 3 cities. But the retail scene, it's a jungle out there, right? Especially with giants like Amazon and Flipkart in the mix.
You're not wrong. It's competitive. Vishal Mega Mart's success will depend on keeping up with what consumers want, running things efficiently, and staying competitive on prices. They'll need to handle both online and offline retail effectively.
It's a balancing act for sure. And MobiKwik. Fintech is exploding, but it's also super crowded. What makes them stand out in all that noise?
They've really found their niche in digital payments, and they've benefited big time from the rise of digital transactions in India, especially after that whole demonetization thing.
Oh yeah, that was a game changer for fintech in India. But like you said, lots of competition.
They're going up against big players like Paytm, PhonePe, Google Pay, and there are always new players popping up. MobiKwik's challenge is going to be making their offerings unique, growing their user base, and finding that path to profitability in this crazy competitive market.
Sounds like they've got their work cut out for them. So both Vishal, Mega Mart, and MobiKwik, huge potential, but big challenges too. A good reminder that IPOs require some careful thought and due diligence. Speaking of due diligence, let's shift gears to those SME IPOs. You mentioned they can be a bit like venture capital, higher risk, but possibly higher reward too. What economic indicators are particularly relevant when you're looking at these smaller companies?
While those big picture indicators are important for any business, some can give you more specific insight into the SME world. Credit growth, for instance, is crucial. SMEs, they often rely on bank loans for funding, so healthy credit growth means banks are feeling confident about lending to businesses. That can really boost economic activity in the SME sector.
So, strong credit growth, good sign for those smaller companies looking for loans. What else should we be keeping an eye on?
Business confidence surveys, they can be really revealing. They basically gauge how business owners and managers are feeling, what their expectations are for sales, hiring, investment, that kind of stuff. Positive business confidence can be a strong signal that the SME sector is healthy and growing.
So understanding the mood and outlook of the SME world is key when you're looking at those IPOs.
Absolutely. And don't forget about government policies. Policies that are supportive, things like tax incentives or less complicated regulations, those can create an environment where SMEs can thrive and attract investors. But if the policies aren't favorable, well, that can really hinder their growth and make it harder to raise capital.
It seems like there's so much to consider when you're looking at an IPO, main board, or SME. The company's own fundamentals, the broader economic climate, how competitive their sector is, even what the government is doing. It's a lot to process.
No doubt, investing is all about looking at the big picture. Understanding how all these pieces connect can help us make smarter decisions. Now, with 6 SME IPOs coming up next week, let's dive into each one and see what we can learn from their stories.
Sounds good to me. Let's start with Denlaxmi Crop Science. Their IPO is already running, opened on December 9th, closes on the 11th. They want to raise 23.80 crore by issuing fresh shares at a price band of 52 to 55 per share. They'll be listed on the NSE SME platform. What jumps out at you about this company?
Well, they're in the agrochemical sector, and that's been seeing some solid growth in India. They make and market a range of crop protection products, and they're really focused on research and development, which is a good sign.
So they're tapping into that agricultural foundation of the Indian economy. Interesting to see how they position themselves in a market that's likely going to be affected by things like climate change and evolving agricultural practices.
Definitely a lot to consider there. Now, let's switch gears to Jungle Camps India. Totally different scene, travel and tourism. Their IPO runs December 10th to 12th, and they're looking to raise 29.42 crore through fresh shares at a price band of 68 to 72 per share. They'll be listed on the BSE SME platform.
Travel and tourism, that's one that's been really sensitive to the economy and what's happening globally. How do you see their prospects?
They're all about ecotourism and wildlife experiences, a growing niche within travel. I think their success will depend on attracting those travelers who want unique, sustainable options, and also navigating those challenges that come with operating in a sector that can be easily swayed by outside forces.
Seems like their focus on that specialized niche could give them an advantage. Now let's talk about Toss the Coin. Their IPO is happening at the same time as Jungle Camps India, opening and closing on the same dates, but they're in media and entertainment. Price band is set at 172 to 182 per share, and they're aiming to raise 9.17 crore through fresh shares. They'll be on the BSE SME platform.
Toss the Coin, interesting one. They're a digital content creation company, producing and distributing across various platforms. Whether they grow will really come down to capturing audience attention in that crazy, crowded digital world.
Content creation is constantly changing. What are your thoughts on their approach?
Seems like they're all about creating content that's engaging and shareable, the kind that resonates with that younger, digitally savvy crowd. To stay ahead, they're going to need to keep innovating and adapting in this fast-paced industry.
It sounds like they're embracing the digital age head on. All right, we've got 3 more SME IPOs to go. Let's move on to Purple United Sales, a retail and distribution company. IPO opens on December 11th, closes on the 13th. Price band of 921 euro to 126 per share, raising 32.81 crore through a fresh issue. First impressions.
Purple United Sales is all about distributing consumer goods, particularly in those rural and semi-urban markets. Huge potential there, but also some logistical challenges, infrastructure limitations, and of course, competition.
Reaching those rural markets effectively, that's make or break for any company in that space.
Absolutely. Building a strong distribution network and reaching those underserved markets, that's going to be key for them.
Now let's take a look at Supreme Facility Management. Their IPO is running the same time as Purple United Sales, same opening and closing dates. They're in the services sector. Price band is set at 72 to euro 76 per share, aiming to raise 50 crore through fresh shares. What's their deal?
They provide a bunch of facility management services, things like housekeeping, security, maintenance, that kind of stuff. It's a sector that often does well when the economy is growing. Businesses and institutions need these services to keep things running smoothly.
So their success is kind of tied to how well other businesses and industries are doing.
Yeah, pretty much. Keeping an eye on their ability to secure contracts with reliable clients and manage their operations efficiently, that's going to be key. And finally, we've got Yash High Voltage, the last SME IPO for this week. Their IPO's from December 12th to 16th, but they haven't announced their price band yet. They're in the industrial products sector, planning a combo of a fresh issue of 64.05 lakh shares and an offer for sale of 11.3 lakh shares. Fill us in, what's their story? Yash High Voltage, they specialize in high voltage equipment, things like transformers and switchgears. This sector tends to be connected to infrastructure development and how much industrial activity there is.
So how they perform will likely depend on the pace of infrastructure projects and the overall buzz in the industrial sector. Wow, we've covered a lot of ground here. From those two big-name main board IPOs to all the diverse opportunities and things to consider in the SME space.
We have. It's pretty clear that this wave of IPOs gives us a glimpse into the energy and potential of the Indian economy, but it also reminds us to be careful, do our research, and make smart decisions when it comes to investing.
Absolutely. But before we wrap up this part of our deep dive, I want to touch on something that doesn't always get enough attention in financial discussions: the human element. We've talked about numbers, trends, market dynamics, but what about our own psychology as investors? How can understanding our own biases and tendencies help us make better choices, especially with something as tempting as an IPO?
Great question. Sometimes our emotions can get in the way and lead to impulsive decisions that we end up regretting. Understanding those psychological pitfalls can be just as important as understanding the financial side of things.
Yeah, it's crazy how our own minds can trip us up when it comes to investing. We've
Right.
all heard those stories, right? People getting caught up in the excitement, making rash decisions, and then regret.
It happens. Our brains, they're wired to react to emotions, fear, excitement, and sometimes those emotions kind of take over, especially in a fast-moving environment like the stock market.
And so what are some of the psychological traps that investors fall into when they're looking at an IPO? How do we spot them and avoid making those impulsive moves?
FOMO, that's a big one. The fear of missing out.
Oh yeah, FOMO.
It's that feeling that everyone else is getting in on something big, and if you don't jump in too, you'll be left in the dust. That fear can push people to make quick decisions without doing their homework.
I think we've all felt that pull at some point, that urge to jump on the bandwagon before it's too late.
Totally. And then there's confirmation bias. We tend to look for information that backs up what we already believe, even if those beliefs are off base.
So if you've already decided a company's a golden ticket, you might miss those warning signs or maybe downplay the risks because you're so set on your initial impression.
Exactly. It's like you're wearing blinders, only seeing what you want to see. And another one to watch out for is anchoring bias. You get fixated on a specific piece of information, usually the first one you see, and it kind of warps your judgment from there on out.
So if you hear that a company's IPO is predicted to have a huge listing premium, that number might stick with you and make you overestimate the company's real worth.
Yep, that's anchoring bias in action.
It sounds like we really got to pay attention to how our emotions and biases can mess with our perception. So what are some ways to get past these mental hurdles and make more rational, data-driven decisions?
First things first, awareness. Just knowing these biases exist is a big step. Once you're aware, you can start to question your own assumptions and make more conscious, deliberate choices.
So it's about taking a breath and saying, okay, I'm feeling this pull, but let's pause and look at the facts objectively.
Exactly. And besides awareness, it's all about grounding your decisions in solid research and analysis. Don't just go with your gut feeling or rumors or what your buddy tells you. Dive into the company's financials, understand how their business works, check out their competition, and read that IPO prospectus carefully.
So ditch the emotional impulses and go for the data. What other tips do you have for navigating the IPO world?
Patience and discipline, those are your best friends, especially with IPOs. Don't get caught up in the hype or feel pressured to make a snap decision. Take your time, really think about it, and only invest if it truly fits your investment goals and your risk tolerance.
It's a good reminder that investing shouldn't be a mad dash. It's about making smart, strategic choices that help you in the long run. Now, let's get practical. What are some specific metrics or red flags that people should watch for when they're checking out a potential IPO investment?
Start with the company's financial history. Look at their revenue growth, profitability, debt levels, cash flow. Ideally, you want to see consistent, sustainable growth over time. If revenues are dropping or losses are piling up, that's a big red flag.
So a healthy financial past is a good sign. But a shaky one means proceed with caution. What else should we be looking at?
Dig into how their business operates. Understand their products or services, who they're selling to, who their competitors are, and their overall plan for growth. A clear, solid business model, backed by a strong management team with a proven track record, that's what you're looking for.
So it's not just about the numbers, it's about understanding the company's story and the people at the helm. What else should we be paying attention to with an IPO?
Check out the details of the IPO itself. Things like the price band, the size of the offer, what they're going to use the money for, and how much of a stake the promoters have. Make sure you get how the IPO money will be used. If a big chunk is going towards paying off debt, that might not be as appealing as an IPO where the money's being used for expansion or new projects.
Right. You want to see that money fueling growth and innovation, not just fixing old problems. Any other advice for our listeners as they navigate this IPO landscape?
Don't skim that IPO prospectus. I know it can be a bit dry, but it's packed with info. Gives you a complete picture of the company, their financials, the risks involved, and the terms of the IPO. It's a must-read for anyone serious about investing.
Well, this has been an incredible deep dive into the world of IPOs. We've covered the excitement, the potential, the risks, even those psychological factors that can mess with our investment decisions. We've explored both main board and SME IPOs, giving everyone listening a solid toolkit for evaluating these potential investments.
And remember, learning is an ongoing process. The more we understand about how the market works, the better choices we can make to reach our financial goals.
A big thanks to our expert for walking us through this fascinating exploration of IPOs. And to everyone listening, thank you for being here. We hope you found this deep dive helpful and empowering. Until next time.